S&P Case-Shiller Home Price Index for January was released Tuesday morning. The index, which tracks prices in 20 metropolitan cities, rose 4.6% year over year compared to 4.4% in December. Here with reaction is David Blitzer, the chairman of the index committee at S&P Dow Jones Indices. And David, we're seeing some slight gains here after quite some time of a deceleration in price increases. What's going on?
What's going on is that prices for existing homes look quite strong and quite robust. 4.5% annual rate is a solid number. If one looks across all 20 cities on a seasonally adjusted basis, taking out the fact that this is January and the weather's been nasty this year, all 20 cities are up on a seasonally adjusted basis. So there seems to be some momentum here and some solid gains, and they're likely to continue.
All right, well, what's driving that momentum? I mean, are we seeing pressure from the Fed's looming policy shift in terms of putting pressure on people to pull the trigger and buy a house before rates rise?
I don't see that. First of all, there's so much debate about the Fed. Everybody agrees they're going to raise interest rates, but no two people can agree on when. So I don't think that's really going on at this point. And I don't see this rush to buy before something bad happens, as much as we're playing a lot of catch-up. I mean, the housing market had a really rough time over the last few years. It bottomed out only 3 years ago in 2012, in fact, a little bit less than 3 years ago. So we're really on the rebound. The big question is new home construction, and that area of activity still has some softness.
All right, and of course, real estate is local, so give us a sense of where the hot spots are around the country and which areas are headed for trouble.
The hot spots are really the West and the South show up. Denver, Miami, and Dallas were the three best cities out there. Most of the California cities look very strong as well, along with the Pacific Northwest. San Francisco didn't do quite as well this month as last month, but San Francisco has been seeing some double-digit price increases over the last several months. The weakness is sort of the other half of the country. The Northeast and the upper Midwest, with one or two exceptions, seems to have some soft spots. Washington and New York, sort of mixed numbers. Chicago, mixed numbers. Detroit, mixed numbers. Boston did a little bit better, and so on. But it's really the upper upper right corner of the country is not doing too well, and the lower left is doing a whole lot better.
All right, now going forward, talk to us about your outlook when it comes to prices. Will we see more of these slight gains, and if so, why?
Well, I think we'll, first of all, home prices typically move slowly. This is not like the stock market where you can, go up 10% one month and then down 6% the next month. It's a little more gradual than that. There does seem to be some momentum, and I would expect prices to continue to rise at something around a 4 to 6% annual rate, certainly through late this year. We mentioned the Fed before. Once the Fed does raise interest rates, I think it'll put a momentary scare into people, but a real impact is going to be delayed till the second or third step by the Fed. And we don't even know when the first step is. The second and third step is more than likely very late this year or into 2016. So we shouldn't damage that till then. The other thing in the background is that wage growth is running about half the rate of home price increase. And that's not instant disaster, but we can't keep doing that for a long, long time without shrinking the pool of people who are in a position to buy a house.
All right, David Blitzer, the chairman of the index committee at S&P Dow Jones Indices. Thanks for joining us.
Thank you. Have a good day.
I'm Scott Gamm, and you're watching The Street.